All right, everyone, why don't we go ahead and get started? Thank you again for tuning in today. It's been a couple weeks since I've been on a webinar, so it's nice to be back. Although we're still kind of talking about the same things. So we were just reminiscing about a year ago when the FFCRA paid leaves went into effect on April 1st, which for this year is also, April 1st is also a big date. So today, of course, is the last day of March, and we'll talk about what that means for what the transition to April will mean in terms of paid leaves and what your responsibilities are as an employer and what the changes are to these leaves as we hit that April 1st mark. But first, as we are often guilty of doing, we are tacking on some content at the beginning today because we have because of the American Rescue Plan Act, and some recent developments around PPP and a grant opportunity for shuttered venues, we decided to tack on some information that you might find useful. If you don't find it useful, just tune us out for a little bit. We'll get through these first 10 slides, and then Kim and I are going to dive into FFCRA. But hopefully you will find this information useful. As always, we will take your questions. Please submit them in the Q&A feature on your screen and avoid the chat if you can. That allows us to record those questions after the fact. And then we'll answer those either in the moment or at the end, depends on where we are and what the question is. So I do have Kim Alexander with me today. Hi, Kim.
Hello, good morning.
Good morning. Kim is back. As our repeat listeners know, Kim has been with us several times now to talk about HR aspects of being an employer, and she is with Mammoth Think HR, which is we partner with on an almost daily basis to solve all of the world's problems. So Kim, we thank you for joining us today.
Oh, thank you for having me. I'm happy to be here.
All right, so Kim's going to hang tight, and I'm going to invite my friend Kevin to talk about the Shuttered Venue Operators Grant. Kevin, how are you?
I'm doing great, Leslie. How are you this morning?
I'm well, thank you.
Good. Well, thanks for having me on. I'll keep it quick today. This is just something we wanted to get out in front of people in case you happen to be operating a shuttered venue. I think like so many people cannot wait to get back into theater or to go see some live music. And this lifeline is part of the recently enacted American Rescue Plan. Actually, it goes back before this, but it's just taken a while for the SBA to roll it out. But yeah, so this grant is going to be available for theaters, performing arts organizations, any place where you're going to see live music. Some museums and aquariums qualify. Some people that represent performers will also qualify. I didn't get into too much of the nitty gritty on those real. I didn't want to split hairs here. I would suggest you go to sba.org and search Shuttered Venue Operators Grant if you think that you're close to qualifying. But if you're the ballet, you qualify. So some of this is fairly obvious. Eligible applicants are going to qualify for grants that are going to be equal to 45% of their gross earned revenue. That's going to be from 2019 numbers. Your max amount is going to be $10 million, and $2 billion of the money allocated in this grant program is specifically reserved for small businesses, that have 50 or fewer full-time employees. One wrinkle in all of this is that if you received likely a second PPP loan draw, but if you received any PPP loan on or after December 27th, your SVOG is going to be reduced by the amount of that loan. This is really meant to be sort of a bridge to reopening. I think that a lot of our venues out there could say this couldn't come soon enough. So if we go to the next slide, the applications open up just around the corner, April 8th. And there's 3 tiers to who's going to be prioritized in terms of the applications that they're going to review and approve. The very first tier is going to be businesses who ostensibly have just been shut down by COVID. And that's going to be folks that have lost 90% or greater revenue in 2020. The next tier is 70%. The third tier is 25%. So that third tier really scoops up just about everybody who would really need this to get to the other side of things. And then after they've gone through that 25% tier, it'll be opened up to all venue operators that can show a reduction in revenue. And I won't go through everything that the money can be used for, because the answer is just about anything. Payroll, rent, inventory, any of the things you need to maintain your business. About the only thing that is excluded would be like opening up a new venue or expand. If you had, say, a small theater and you wanted to expand to include, a bar upstairs or something, you could not use this money for that. Really, at the end of the day, it is meant to keep you open and help you survive to, once everybody's got 2 shots in their arms and we can get back out there. And I can see, I actually, there's a chance that I will get to see my favorite band, the Hold Steady, play in Denver in June. And so I am fingers crossed that happens. But yeah, if you are the operator of a venue who's been disproportionately impacted by the pandemic, we do urge you to apply for that free money. And hopefully it means that you are around on the other side of this. That's all I've got for you today, Leslie.
Thanks, Kevin. A couple people just logged in, so I just wanted to review the previous slide, which is to say that this is a shuttered venue operators grant that applies for theaters, performing arts organizations, music venues, and museums who have had to close. So if this applies, if you fall into those categories, it's worth Googling this and seeing if you qualify. And we're just presenting a couple slides on this today. We're not doing a deep dive, but we thought it was worth mentioning.
And I'll say that SBA.gov has a pretty clean page. It really spells it out for you. So if you're in this category, I'd start there and get that application in on April 8th.
And now we have a new acronym, SVOG.
SVOG, that's a fun one.
Yeah, it's a good one. We'll add that to the list. All right, thanks, Kevin.
Good thing.
Okay, and my friend Tracy is going to come on and talk about her favorite thing ever, the employee retention credit. Hi, Tracy.
Hi, Leslie. How's it going?
It's good. How are you?
Oh, I'm good. Bogged down with ERC, but I want to make sure that people have all the information that they need. It's just a lot. I mean, it's just, it's like if, then that, and I feel bad for people trying to figure this all out.
Yeah, so Tracy's put together some 8 or 10 slides to go through. Like she said, it's a complicated program. There's 2020 to consider, there's 2021 to consider. So she's laid it all out here. And by the way, we will post this presentation, both the audio and the slides, on our website on the COVID page by close of business today. So the following slides are very wordy, but that's for your benefit if you wanted to go and download this presentation in a couple hours to keep for your reference. All right.
Okay, so there's actually 3 acts that impact ERC, which is the Employee Retention Credit. There's the CARES Act, which was first, and that covers the wages that were paid from March 13th last year through December 31st. And then we had the CAA, which was put into place on December 27th. And that covers wages from January 1st of 2021 through June 30th of 2021. And then we have ARPA, which went into effect on March 11th, that covers the wages from July 1st through December 31st. All right, so the amount of credit differs from 2020 to 2021. So in 2020, if you're an eligible employer, you could get 50% of the qualified wages paid to each of your employees, plus the amount that you used to provide qualified health benefits to each employee. And I think I have the limit. It's going to be on the next one. It's up to $5,000 in 2020. In 2021, they raised that credit amount to 70% of the qualified wages and included also that health benefits. And ARPA did extend that same 70%. So it's for the entire year for the ERC for 2021. Okay, so the eligibility, and that's where it kind of gets a little bit sticky. In 2020, which is under the CARES Act, the eligibility was extended to any company that was fully or partially closed by a governmental order. It couldn't be something that you just decided for yourself. You had to have a governmental order that said that you had to be fully or partially shut down, and that if you think about restaurants or gyms, even some dental offices were closed at the beginning, or doctor's offices that weren't able to do elective surgeries, all those kinds of things equated to a partial shutdown or a full shutdown. If you were a trampoline park, if you were a hairdresser, nail salons, any of those people who were impacted by that partial shutdown would qualify for ERC 2020. The other caveat was if you could stay open, but you had a decline in gross receipts of 50% or greater, that was the other qualifier in 2020. In 2021, which is CAA and ARPA, they kind of dictate that part of it. The two qualifiers were similar to what you had in 2020. The partial or full shutdown was one of the qualifiers, and the other one, though, was a decline in gross receipts of 20% or greater. And you want to look at the quarter that you're in, or you can look at the preceding quarter. So if you're in quarter one, which we still are for one more day, you can look at quarter one to see if you have a 20% or greater drop, or you can look at fourth quarter of 2020 to see if you have a 20% greater drop. And it all gets compared back to the same quarter of 2019. So they go back prior to the pandemic. So you're going to compare Q1 2021 to Q1 2019, or Q4 2020 to Q4 2019. So that's how they did that. So that's how it works for 2021. All right, so the maximum credit amount. So for the CARES Act, which dictates 2020, that's up to $5,000. So it's basically 50% of wages up to $5,000. So if you had an employee, who made $3,000, you're only going to get $1,500, and that's for the entire year. So that $5,000 applied to the entire year from March 13th all the way to the end, or really whatever your qualifying time period is. For the CAA and the ARPA, the credit amount cap was increased to $7,000 per quarter. So in 2020, it's $5,000 for the entire time. In 2021, it's $7,000 per quarter per employee. So you could get a maximum of $28,000 per employee in 2021 if you qualify. Okay, so they did have some caveats for whether or not an employee is working. So if you are an employer, and now this is for 2020, if you're an employer of under 100 full-time employees, all wages count. In 2021, you have to be an employer of under 500 full-time employees. If you have over that threshold amount, then it's only going to be wages that you paid or health benefits that you paid to employees when they're not working. Think paid furlough in that situation. They do it based on a full-time employee, and what they consider to be a full-time employee is someone who works 30 hours or more. So people who work part-time don't count in your employee count, but their wages are counted. So all wages are eligible, but look at your threshold of full-time employees to determine what portion of those wages would be applicable. So is it all wages because you have under the threshold amount, or is it only wages for employees that aren't working? And that's just a continuation of ARPA on what I just said. That also has that severely, I think it's the severely, what is it? Severely financially distressed employer. Yeah, severely financially distressed employer. So there's a whole caveat in there, like, and they put in there, like, think about like cruise and hospitality and entertainment industries where they were down like 90% on their gross receipts. And in that case, they didn't care how many people worked for you. you could still get the ERC. I just don't know how you're paying anybody if you're down that far. But anyway, they made that little caveat. So I put that in there.
And so these severely financially distressed employers are only eligible to claim the credit for the second 2 quarters of 2021.
Right. Yeah, because that's for ARPA. Sorry, I should have said that too.
That's okay. There's a lot going on here. This is a very intimidating slide.
It is, but most people don't apply. You know, they're not. This is not applicable to them.
Right. Okay.
It's hard to stay in business if you're down 90%.
Right. And again, we will post these slides on our website on the COVID page by the end of the day today. So you don't have to memorize all of this or take notes. We will have these slides up in a few hours.
Okay, for PPP loan, a lot of people never even thought about ERC because they had a PPP loan, and at the onset of all these programs, it was an or. So you either had PPP or you had ERC. But on December 27th, the CAA extended it to employers who had gotten a PPP. So now the only thing that they tell you is that if you got a PPP loan in 2020, the payrolls that you allocated toward that PPP loan would not be able to be allocated toward ERC. So in other words, if you got your PPP loan on, April 1 and you used it through, July 30th, then you would apply ERC, August 1st through the end of the year. If you're eligible, if you have one of those qualifiers, if you're a restaurant or something like that, or you're down on your gross receipt. So you could do that. You don't have to include the PPP loan amount in as anything. You don't even do anything with that. So that's how it works for 2020. In 2021, it's pretty much the same way. That program started on 1/1/2021. So let's say you're an employer and you qualify at the beginning of the quarter, but you got your PPP loan on March 15th. All the payrolls that were paid from 1/1 to 3/15 would be eligible for ERC. Then you would stop using ERC, switch over to PPP, use that until you reach that 60% threshold or wherever you have to be able to be forgiven with your non-payroll costs as well. And then you would switch back to ERC if you're still eligible. So you could go from March 15th until, June 30th. And if you're still a shuttered, if you're a partially closed restaurant or gym or whatever, or you're down in your gross receipts, you could switch back over to ERC after that PPP time period is done and stay on ERC until the end of the year or when you become ineligible.
Speaking of PPP time periods, breaking news.
Yeah, breaking news as of yesterday, Biden signed an extension of PPP2 for applications. It was supposed to end today, but he extended it to May 31st. And he also gave the banks another 30 days to be able to process those applications. So, if you haven't applied for PPP2 and you'd like to, you still have time.
So not to put you on the spot, Tracy, but sort of a process question for you. If somebody is listening to this and hasn't really plugged into the ERC game just yet, but they now are wondering if they qualify or how to make sense of some of this. We always recommend consulting a CPA. You could also submit a question to us, and we can help you navigate. Anything else on that sort of process piece, Tracy?
So we have a survey that's actually on our website that you can, that just sort of gets the ball rolling. So if you reach out to us and you're like, hey, I want to get going with ERC, we will send you the survey. But as far as qualifying, if you're a business that like we can't be at 100% capacity because we're trying to comply with a governmental order, that automatically qualifies you for ERC. The decline in gross receipts, and a lot of times we will get clients who will send us their financials, and we really can't do that. We don't, it's not that we won't do it, it's just that we just can't do it. We just don't have that that knowledge base to be able to calculate those financials. So it would be best if you're unsure if how far down you are with your gross receipts, I would reach out to your CPA to determine that. But a lot of clients are able to do it themselves too. So, if you've determined that you're 20% or greater, then you do qualify. This program is basically a self-qualifier. So you just need to let us know, hey, we're going to reach back. Once you fill the survey out, we're going to reach back out to you and say, which qualifier do you meet? And then we'll take it from there.
And the survey is located at the very top of our COVID-19 resources page.
It is on the forms and something.
Yeah, well, there's sort of two sub pages. There's one for webinars and one for forms and resources. And so you want
but it's on the forms and resources page. I just looked at that today. We might have to move it.
Yeah, we might have to put it on both. All right.
Anyway, yep, that's it in a nutshell.
Well, Tracy, before you go, I'm going to put you on the spot again. So speaking of processes, I know this is all still sort of being worked out, but we're about to dive into the law for the new paid leaves. But tell us, is there anything new that you want to report to these folks verbally around what they need to do if they're one of our clients and they want to take advantage of these paid leaves?
So, Stephanie and I were talking about this morning. She said it was like a plot twist, which it is. So used to be they had the FFCRA wages could go towards Social Security and Medicare, and I can't remember what else. But anyway, they changed that up, and now they're making that it still goes towards your taxes, but it's just different taxes that it goes towards now. And so because of that, we can't use the same codes that we had before. So ending today, the old FFCRA codes that everyone is used to will no longer be able to be used as we go forward into the new bucket. Those 10 days will have to have new codes put into our system. So you can reach out to customer service about it. If you have if you have somebody who's out right now and they're going to be out through the end of the week, or, on the very next payroll, that needs to be allocated to the new codes. Those wages need to be allocated to the new codes. Just reach out to customer service and they'll be setting that up. The codes aren't actually going to be available until Friday, which is April the 2nd. And we can make adjustments if we have to, but we'd rather not. We'd rather get the codes in there. So just let us know if you need those codes set up. But that's what's going to happen with FFCRA. I don't know why they changed things up.
Yeah, they had to mess with the taxes, didn't they?
Oh, it just made it harder.
Yeah.
I mean, we can do it. It's just, it would have been nice if we could have just refilled the same bucket,
Right.
and use the same codes. People were comfortable with that were using them, and it wasn't that big of a deal. But
I feel like when they write these laws, they're like, how can we make this as difficult as possible for payroll companies and their clients?
I just don't think they think about how this actually looks to the boots on the ground, to people who actually have to implement this and people who have to use it. I mean, it's just, they make it difficult.
Yeah. Well,
Anyway,
we appreciate you, Tracy, for helping us make sense of all of this. And again, for our listeners, we're going to dive into these now, and I'll reiterate what Tracy said at the end about how to actually take action if you'd like to use these leaves. Thank you, Tracy.
thanks for having me.
All right. All right, Kim, are you still with us?
I am. I learned something new from Tracy there with respect to the different taxes. So I was not aware of that. So that's awesome.
Yes, I learned something new from Tracy pretty much.
It's not awesome. It's horrible.
Oh, well, I agree with you that they create these laws with little respect to how to actually implement them and get them done.
Yeah, they need Tracy or Stephanie as a consultant on
That's right.
their teams. All right. Well, hopefully you guys were able to glean some useful information from that surprise information. Now we're going to get to the topic that we advertised. So if you've logged on late, we are my friend and colleague Kim Alexander from Mammoth Think HR is with us today, and we're going to go through the newest iteration of paid leaves for COVID. So I still call these FFCRA paid leaves. The new legislation is called ARPA. A year ago, Congress passed the very first legislation, which was FFCRA, Families First Coronavirus Response Act, which mandated paid leaves in 2020. So you might recall that employees of companies with 500 or fewer employees in 2020 were federally entitled to, by law, paid leave if they came down with COVID or had some other qualifying reasons. In late December, that changed, that the Congress changed it to a voluntary program. All the same rules applied, eligibility rules applied, but it was now up to the employer if they wanted to go take the tax credits and grant these leaves. Now with ARPA, starting tomorrow, the paid leaves are still voluntary. So it's still something that you can opt into or out of as an employer. But it's a great option, frankly, as we continue through this pandemic and people are still, either getting sick or might have some symptoms or have been exposed or are waiting a test. You should, they're designed to keep people out of the office, away from your other teammates and your customers, so that you don't have any sort of further outbreak or complications. And then the government pays the wages for you. So that's what we were talking about earlier with the codes in the earnings codes in our system. You would track those hours using special earnings codes. And then we would, when payroll is run, the taxes that would have gone to the IRS are diverted back to you to cover those wages. So we were talking about earlier, the taxes, the reason why we have to set up new codes is because the taxes that it affects have changed. So you'll still get the credit. It's just the sort of back end machinations are a little different. So that's sort of where we are now. I know it's confusing, but we're going to try and make it simple. There are definitely some changes, though, that we're going to talk about in a second. A quick questions on codes here. Betty asks, if we don't need the new FFCRA code this week, will DP implement the code for all companies going forward, or do we need to reach out to customer service? And Tina says, do the codes that are already set up need to be changed? So I think Tracy's still on, but I'm going to, so correct me if I misspeak, Tracy, but just as before, I think if you would like to use the new FFCRA codes going forward post April 1st, I do believe you need to email customer service. I don't think that we're going to set them up automatically for everybody. But
yes, that's correct.
Yeah, because we can't, there's no way to do that, I think, right?
Right, there isn't. And Stephanie sent out something that said we have 550 plus clients who use the old FFCRA codes. And it does take a little bit of time to get them into the system. So yeah, it would be best if you reached out to customer service to have those codes set up. And I think they're going to be sending out a macro or something, making an inquiry to get you on a list so that people can just kind of work through the list.
Yeah, and I know that's an extra step for everybody, but that seems to be the quickest way to get it done. And if you have somebody who is out this week or before basically the new codes can be set up for you, we can adjust retroactively, right, Tracy?
We can, it's kind of a pain because everybody has to remember to do that. Like your client has to remember to do that. And but yes, we absolutely can do that. It's just, the other thing about getting the codes right is that it's allocated to the correct taxes. It goes on the 941s the way it's supposed to. So it's really important that you don't like say, okay, well, I'm going to make up my own code for this. It's much better if we kind of stick to what iSolve platform understands, and the workflow will be much better.
Right. So the short answer is yes, we need to set up new codes for you. If you're interested, if you think you might be use this program after tomorrow, email customer service at dominionpayroll.com and go ahead and get yourself in the queue, because we're going to be doing a lot of, like we said, we have 550 clients who have codes set up from before.
Right.
We need to go in and manually set those up for the new era.
I think what I would put in like the subject would be something like request for new FFCRA codes.
Mm-hmm. Yeah. Okay. And then Anonymous asked, do we need to do this until September 30th, or can we just honor these through June 30th and extend if needed? We're going to get into this a little bit, but so basically you don't need to do anything, but I would, because it's not mandated, but I would, it is written into the law that you cannot discriminate or retaliate. So I would just say be consistent. If you have somebody, right now, hopefully by September 30th, this won't be an issue. That's just Congress's sort of best guess as to how long these paid leaves will be necessary. Hopefully you won't need them as we move further through 2021. But I think if you extend them to employees in June and then you hit June 30th and then someone else needs it in July, I think you should be consistent. I don't know, Kim.
Right. Yeah, I absolutely agree with that. You do want to be consistent. So if you begin to offer it in April, you're going to want to continue to do so through the remainder to September 30th. But I would say this, for employers who did not offer it in the first quarter of this year, when it became voluntary, you can still now choose to offer it in these next 2 quarters. Additionally, you can choose to offer just emergency paid sick leave and not expanded family leave. So that's entirely up to you. But as Leslie said, these are leaves where essentially the government eventually pays it for you. So why, this is a great protection for the organization and a great benefit for the employees.
Yeah, and on that note, Anonymous also alludes to a big change in the eligibility for these paid leaves. He or she asked, does this include employees who need to be out to receive a vaccine? And yes, it does. We're going to get to that in just a second. All right. So just a quick reminder, I know I'm like a broken record with this, but as employers, you are subject to OSHA's general duty clause, which states that employers have the responsibility to provide a safe and healthful workplace that is free from serious recognized hazards. This includes the deadly virus. So these leaves aren't just sort of a paid vacation for an employee. This is also a way for you to, demonstrate that you are following this clause and doing the very best you can to keep your other employees and customers safe. And the government, like Kim said, the government's going to pay for these wages. So it's a great option. Okay, sort of a summary of the new ARPA era paid leaves. Like we said, the time frame is the next 2 quarters, starting tomorrow. They're optional for you to exercise, but please be consistent. There are expanded eligibility rules, and we'll go into these in detail in just a second. It still applies to employers with 500 or fewer employees. And this bullet at the bottom is kind of a big one. the hours reset as of April 1st. So as of tomorrow, everyone's bank resets, regardless of what they used in 2020 or even the first quarter of 2021. And we'll talk about what it resets to in a second, but that's a big deal. So I mean, the one thing, it's a really good thing because now everyone's sort of on a level playing field and you don't have to go back and do the math to calculate, oh, did Kim take, 42 hours in 2020? What is she entitled to in 2021? It doesn't matter anymore. As of tomorrow, it all resets.
And I think it's important, Leslie, to point out that if an employee had not used any of their bank of leave in the past, it doesn't roll forward as well. So it resets, right? It just, if you didn't use it, you've lost it.
Yeah.
And then I would also add, we really don't have definitive guidance from the Department of Labor with respect to the expanded family leave and whether that bank resets. We're waiting for some additional guidance on that.
I keep refreshing that FAQ page every morning.
I know.
Hoping for something out, question 106 to be answered, but anyway. So yeah, thanks for that, Kim. I think you just answered Nicole's question, which says, are you required to reset the FFCRA hours available to 80 hours for all employees? Or can you elect to keep the current FFCRA balances as is for those who still have time available from the first go round? And the answer is no, everybody resets.
Well, and I think too, that's really going to tie into your codes, right? So that's just another reason why we want to use the term reset.
Yeah. Yeah, it's similar to if you have a PTO policy where you don't have any carryover, everybody just gets 80 hours on January 1st for that year, and they either use it or lose it. And then the next year they get another 80 hours. That's what they're saying here. So it doesn't matter if somebody has a balance from earlier or they've taken leave or they haven't taken leave, there's no carryover and there's no applying any balances from prior to April 1st. Deborah says, are you saying the 80 hours resets? If so, does that mean someone who already has used 80 hours is now eligible for additional hours? Yes, the answer is yes. Let's see, Betty says, do we have confirmation from the DOL or other sources that we can voluntarily offer either or FFCRA paid leaves and the now more expanded EFMLA? Let's, Betty, that's a great question. Let's move forward a little bit. We're going to address that in just a second. And I'm going to explain to folks the difference between emergency paid sick leave and the expanded EFMLA because some things have changed. So hang tight, Betty, we will get to that. Okay, what stays the same? Again, employers with fewer than 500 employees, benefits should continue. You should not discriminate or otherwise retaliate against employees who take paid leave. You can't cherry pick who you're going to give the leaves to and who not. You just need to, if you're going to allow it for one person, you need to allow it for everybody. The tax credit, it occurs in real time via the payroll process. The max amount of the tax credit stays at either $200 or $511 per day for emergency paid sick leave, which is the 80 hours that we're talking about, depending on the reason. We'll get into that in a second. For EFMLA, the tax credit is $200 per day still. That hasn't changed, but the length of the number of weeks has changed. So we'll go into that in a second. And then you are supposed to allow employees to use paid leaves before they burn through any of their own PTO that they've earned under your plan. So I went through that pretty quickly, but we're going to expand on some of these bullets in a second. Anything to add here, Kim?
No, I think you covered it really well.
Okay. Okay. So emergency paid sick leave, or EPSL, or sometimes we call it e-sick. That's the 80 hours that we've been talking about. That's what resets tomorrow. And what has changed in terms of qualifying reasons is that it now can be taken for also to get the COVID-19 vaccine and to recover from any side effects. So if somebody gets their second shot tomorrow, you can pay them using this paid leave for the time out of the office they take to get the shot. And then if they have any side effects and need to take a day off to recuperate, you can also pay them under EPSL. When we talk about the 80 hours, well, I'm skipping ahead. I'll do my second bullet first. The other thing that's changed is that employees can take EPSL when seeking or waiting for a COVID-19 diagnosis or test result, if they've been exposed, or if you have asked them to get a test. So I know a lot of people actually use this reason. This is sort of an unspoken reason in the earlier versions of FSCRA, and it to us in the HR community, it seems like they just sort of they blundered a little bit and forgot to actually explicitly create this reason into the first law, because a lot of people pay people to stay home as they were awaiting a test, because to me that was sort of an implied qualification, but now it's explicitly stated, so clarity is good.
Right.
So those two first bullets are big ones. So you've got the vaccine reason, which is new, and you have the actual explicit awaiting a diagnosis or a test result. Now on the third bullet here, like we've said, all employees are eligible for a new bank of leave on April 1st, regardless of what balances they used or didn't use before. Full-time employees get 80 hours. Part-time employees get a prorated amount. So not everybody's entitled to up to 80 hours. It's only if they typically would work 80 hours over a 2-week period, which is that sort of quarantine sweet spot. If you have a part-time employees, I would do maybe a 6-month look back and average out what their average number of hours are, and that's what they're entitled to. Now they don't have to take it all at once. Obviously, if they're sick, they need to stay home for as long as they need to be. But if you're going to use this for vaccine coverage or waiting for a test, they might not need all of their hours that they're entitled to, in which case that balance will remain theirs to use until September 30th. Did I explain that okay, Kim?
Yeah, absolutely. So, the 80 hours is based upon a full-time employee whose full-time status is 40 hours per week. So if your full-time status is, let's say, 37 and a half, then you would be, it would be 37 and a half times 2 would be the amount of leave. And I can't do that right off the top of my head, sorry. But yes.
Okay. And then the law, ARPA explicitly states that employers cannot provide emergency paid sick leave in a manner that favors highly compensated employees or full-time employees, or that discriminates based on how long employees have worked for the employer. So just be consistent. Okay, let's see here. All right, before we get into EFMLA, I'm going to answer Deborah's question, which is an employee eligible for ARPA if they are out sick but don't want to take a COVID test? We have only approved e-sick as of the date they take the test. And again, e-sick is a term that people use interchangeably with EPSL. It's all the same thing. It refers to that 2-week period. And Deborah's asking if somebody is out sick but they don't want to take a test. What do you think about that, Kim? I mean,
yeah, I think that's kind of that's really a gray area, because the emergency paid sick leave allows for someone who is experiencing symptoms and seeking a diagnosis. So to me, they're missing that other portion. And so only if their doctor advised them to quarantine would I say that is an eligible reason. I would also, just to confirm, you might want to just talk with legal counsel about that. In my view, that's really gray. If their doctor did tell them to quarantine, then yes, that would be a qualifying reason. But if they're just staying home and not seeking a diagnosis, I don't think that would qualify.
Yeah, I mean, we had a bunch of cases in 2020 where, a couple bad apples were, got wind of this leave and were using it as I think I've been exposed. I have a couple symptoms. I'm going to stay home and be paid for it. And, there's a part of me that says, you know what, let's just be cautious and let them stay home and pay them for it. It's not worth it. They might have it. This is such a pervasive virus. But on the other hand, we don't want people to abuse these leaves. So
Correct.
I think the middle ground is they need to show some due diligence.
Mhm.
In Virginia, at least, well, actually, the CDC has said that, you could either ask for a negative test result or enough time. There's a sort of a time-based strategy
Mhm.
where enough time has passed where that person, if they had COVID, they're no longer contagious. And that's where you get into that like 10 to 14 day quarantine window. And
Right.
that's why EPSL is the length of time.
Right. Right. But I think we just need to remember what the qualifying uses are for EPSL. And so I would at least at the very least recommend getting the doctor who has told them to quarantine. I think that from a compliance perspective would protect the employer.
Right. Yeah, they need to be seeking some sort of professional opinion.
Correct. Totally agree.
Okay, so Deanna asks, can we require documentation from a physician? Yes, you can. Documentation, and then I would keep it in their file for the next 6 years, just in case the IRS gets bored one day and decides to audit users of these paid leaves and tax credits. And then we've got a sort of a related question. Is it okay to ask to see the vaccine record if they take EPSL for the vaccine? That's a great question.
That is a great question. And I think that I think that you can. I'll tell you what we haven't received as of yet is what documentation is required. Give me 1 second here and let me do a little search here and we'll come back to that if that's okay, Leslie.
Yeah, that's fine. I mean, I know that the Equal Employment Opportunity Commission, which is the agency that has put out guidance on sort of what employers are allowed to ask and what they're not, the EEOC at the federal level does not consider a vaccination to be a medical procedure, and has thus said that it's okay to ask whether or not they have the vaccine. It's okay to ask for proof, but you cannot ask why they haven't gotten it. So, because that might elicit some protected medical information, like maybe somebody is pregnant or has a pre-existing condition or whatever. So it's my understanding from the EEOC's webpage, and we've said it on here before when we've done vaccine-focused webinars, is that you are allowed to ask if they have gotten the vaccine or not, and you are allowed to ask them to produce proof. You just can't ask them why they haven't gotten it yet. If you have a vaccine policy in place for your business, which I strongly suggest that you do if you haven't already thought about it. If it's a mandatory policy, then that's one thing, and then you need to definitely shake loose some proof. If it's voluntary, you could, if you're going to pay them using these tax credits, then that proof is something that you could use and put in there.
So I just looked up our request form when somebody is looking for EPSL or requesting leave. And so if you remember way back in the FFCRA first came out, there was really minimal documentation that was required. The Department of Labor put an awful lot of faith and trust into individuals when reporting the need for the leave. So essentially, really the approach that goes with the FFCRA is to have the employee attest to the fact that they need this leave because they are obtaining a vaccine or they're having symptoms from the vaccine. So that would be what I would advise, rather than requiring the documentation.
Right. But I think that but legally they can require it, right? I mean, if I'm reading,
it's just not required as part of EPSL.
Okay.
Yeah.
All right. And then Anonymous asks, if you voluntarily provide EPSL for COVID vaccinations, do you have to provide it also for paid days off, or can you only provide it for vaccinations? I'm not sure I understand your question. When you say paid days off, do you mean for the other qualifying reasons, like if someone's actually sick with COVID, or has to take care of someone who's sick, which we'll get into those qualifying reasons in a little bit, but Anonymous, if you could, yes, that's what I meant. Yeah, so in a couple slides, we'll go through the qualifying reasons, and they all are reasons why it's not either or, it's all of them. All right. EFMLA. So as before, EFMLA originally was 12 weeks of leave with the first 2 weeks unpaid. And the only reason was if your child was home because his or her school or daycare was closed due to COVID. That was the only reason. Now, EFMLA can be used for any of the emergency paid sick leave reasons, in addition to the original childcare reasons, including the vaccine. It's now a full 12 weeks. There's no unpaid first 2 weeks. And the maximum reimbursable tax credit for you as the employer is increased to $12,000. So that's essentially $200 a day for 12 full weeks. We're not clear as to whether employees are entitled to a new 12-week bank of EFMLA. We are awaiting guidance. It is possible that an employee will be entitled to additional unpaid protected time off. So this is the part that we're still sort of refreshing that DOL page to kind of figure out how FMLA, the balance is applied to people. We're clear on the new eligibility. We're clear on the new tax credit max. We're clear on the number of weeks. We're not clear on if someone has used it already, does their bank reset? So that's, I don't know what else we have to say on that. Kim, in terms
I agree, right. We need some guidance from the Department of Labor on that matter.
So back to your question, Betty, if I'm interpreting this correctly, you can offer EPSL or ESIC and not offer EFMLA, but you just need to, if you offer one to one,
You have to be consistent.
Right.
Mm-hmm.
You can't pick or choose. Now we're just not sure what to do if somebody, I mean, I'm not sure. I don't want to misspeak, because if someone already used their 12 weeks of EFMLA back in the 2020, which was highly conceivable because a lot of schools were closed,
Mm-hmm.
then would they get a brand new fresh 12 weeks? And then now they can also use it. It's not just childcare. They can also use it for self-care or taking care of somebody else who's sick, or to get the vaccine. I mean, conceivably they wouldn't really need 12 weeks for the vaccine reason, but
right.
If they're a COVID long hauler or caring for someone who is, or if their child's, like my child's schools are closed through the rest of the year, so I could qualify for this.
Mm-hmm. And I think it's important to recognize that most likely employees are going to use their EPSL first, because there's a higher limit for most folks. They're going to get their full pay for those days, whereas under EFMLA, it's 2/3 of your pay up to $200 cap. So most likely folks are going to use their EPSL first.
Yeah, exactly. And so and Deanna's question is, which you just answered verbally, is yes, EFMLA is paid at 2/3 rate of pay, no matter what the reason. So to me, right, EFMLA is like well, for the childcare reason aside, now for the new reasons you could use EFMLA if you're sick or caring for one who's sick, or been asked to quarantine by a physician. EFMLA is there as sort of what's the right word I'm saying? Sort of a backstop to EPSL if you need longer than 2 weeks. So if you were sick in 2020 and you needed longer than 2 weeks to recover or to take care of somebody who was recovering, you only had the 80 hours and that was it. After that, you had to use PTO or take unpaid time or whatever. Now you have this sort of second option that's not as ideal because it's only 2/3 pay, and most people don't want just 2/3 pay, but it is something that can bridge the gap between 2 weeks of paid sick leave and then nothing, so
right.
So Yeah, I mean, you can choose not to offer it, but if you've got somebody who's a COVID long hauler or has children out of school still and they need to be at home with them, you could use it intermittently. It doesn't have to be 12 consecutive weeks, 60 consecutive days. It can be, well, my child's home on Monday, Wednesdays, and Fridays. So that then I would take EFMLA on Monday, Wednesdays, and Fridays, and then Tuesdays and Thursdays I would be paid normally. And so that's when those codes really, that it's a little bit of an administrative nightmare for whoever's running your payroll, because you got to go in and make sure that Monday, Wednesdays, and Fridays are coded properly, and then Tuesdays and Thursdays are coded normally, so that the taxes will be routed in the right direction.
And just to tack on to that is, remember, this is for, these leaves are for those folks who are unable to work from home or work remotely. When they're not able to work, these leaves come into play. If they're able to work remotely, they're not sick enough so that they can't work from home, then these leaves wouldn't apply.
Right. Yes, that's a great point. If someone's working from home, then they would just be paid normally.
Mm-hmm.
It's the people who cannot perform their roles and responsibilities no matter where they are, because of the qualifying reasons that I keep alluding to. We're going to get to in a second. Okay, so Betty says, I thought the rationale for the 10-day unpaid waiting period was there because the EPSL covered the first 10 days, 80 hours. Does this change then allow double dip? So basically, Betty, that sort of, you're right, in 2020, you would overlay the EPSL over top of the first two unpaid weeks of EFMLA, because the first 2 weeks of EFMLA were unpaid. Now, basically, what they're saying is you have 2 weeks or up to 80 hours of EPSL, and then 12 weeks of EFMLA. All of those 12 weeks are paid at the two-third rate. So it's a 14-week, potentially a 14-week period. Now, again, we're not sure about the status of that 12-week EFMLA bank for people who have used it in the past. We're not sure if that resets or what. But yeah, so now it's a 14 weeks of paid leave. The rate of pay is different, but it's 14 total weeks. I hope that makes sense. Nicole says you can elect to provide EPSL or EFMLA. Can you break them out and not have to combine offering both? Yeah, so the way the new law is written, you don't have to combine them, because there's no unpaid waiting period for EFMLA. Unless, Kim, correct me if I'm wrong, there's no reason to overlay the two.
Correct.
Yeah.
Correct. Yeah. They're separate.
Yeah. They're just the thing now that's more consistent, aside from the fact that it's every week is paid, is that they're now available for the exact same qualifying reasons. So as before, EFMLA was only for the childcare reason. Now it's for the same exact reasons as EPSL. So knock on wood, if I get sick tomorrow and I need more than 14 days, I would burn through EPSL and then I would switch to EFMLA. I would take a bit of a pay cut, but it's still, I'm getting paid something so I can recover, if 2 weeks wasn't enough. All right. How does this work if we have short-term disability? Great question. I would double check with your short-term disability carrier. Let them know that you are planning to provide these paid leaves per ARPA. And it's my understanding, and Kim, correct me if I'm wrong, and I believe this happened a lot last year, is that you would allow them to use their paid leave, these EPSL and EFMLA before they would go into short-term disability.
Yeah, depending on how much your short-term disability pays, if let's say, the $200 per day, if that could make them whole, I think they could probably do both at the same time.
They could run concurrently.
Yeah, as long as it doesn't take them over their eligibility. So in a situation like that, they might want to do short-term disability and then only use the amount of EFMLA that would make them whole.
Yeah. Okay.
Make sense?
Yeah, it does. It does to me. Hopefully it does to Anonymous. Does the FMLA still protect the job just like the regular FMLA? Yes, it does. All right, I'm realizing that it's 12 o'clock. Are you okay, Kim? Do you need to
I
hop?
am. I can go about another 15 minutes if that works for you.
All right, I'll try to be speedy.
All right.
All right, so again, the same thing here. You cannot be inconsistent. You can't just decide to let people take FMLA because you like them better, or they are fall into a separate pay grade or department. And then you should allow, if you're going to offer FMLA, you should let people use it before burning through their PTO that they've earned under their plan with you. Okay, now we're going to get to the qualifying reasons. All right, so starting tomorrow, employees can take EPSL or EFMLA for the same exact set of reasons, which is a very useful simplification. Spent a lot of time last year trying to describe the differences, but now it's all the same. And they are this. The reasons are, number one, when quarantined or isolated, subject to federal, state, or local quarantine or isolation order. Second reason is if an employee is advised by a healthcare provider to self-quarantine because of COVID. And the third one, it has changed. The first two are the same as before. The third one is when the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis, seeking or awaiting the results of a diagnostic test or diagnosis because they've been exposed, or obtaining a COVID-19 vaccination or recovering from any related injury, disability, illness, or condition. All three of these reasons, which I sort of refer to as the self-care reasons portion, are paid at 100%.
And Leslie, if I could just kind of go back to a question where one of our guests had said they had somebody that was experiencing symptoms but didn't want to take a test and what to do. And my advice initially was, they should be advised by a healthcare provider to quarantine. Well, essentially on the request form that we have, the employee just needs to attest to the fact that they're experiencing symptoms and they're awaiting a diagnostic test or a medical diagnosis of COVID because they've been exposed. So all they have to do is attest to it. Again, the Department of Labor has put a lot of faith in individuals. And, you as the employer could get into some sticky issues if you're asking for more documentation than the law actually requires.
Okay.
I just wanted to clarify that.
Yeah, it's so tricky because it's like the whole reason why this law exists is to keep people from getting sick. And so, I definitely had some clients call me last year and say, I know this person is lying to me. I know that they're sick.
Yeah.
And my counsel to them was, you just probably need to just let them stay home. I mean, it's the benefit of the doubt. If you're wrong and that person actually does have COVID,
right.
It's just not worth it.
I think the exception would be if you had hard documented evidence versus just being suspicious of. But I'd still run it by my attorney before I would decline the leave.
Okay. The last two reasons for both EPSL and EFMLA are the caring for someone else reasons. And these are paid at 2/3. So this is number 4 is when you're caring for another person who is isolating or quarantining on government or doctor's orders. And number 5, when caring for a child whose school or place of care is closed due to COVID-19. That is the same. Number 5 has always been the same. Well, actually, so is number 4. And I will say that these self-care reasons might be common reasons for someone to use EPSL and then get into EFMLA, because if you're caring for someone in your household who's sick, if I were an employer, I'd say, great, now you need to quarantine for another 2 weeks before coming in. And that way, and then you could pay them, for 4 weeks worth of leave. And then the childcare option, that's, we all know about, that each school district is different. And so you definitely are going to need more than 2 weeks, probably, if your child's school is closed and you don't have an alternative plan for where that child is going to spend the day. I would also say that I know it's been a year into this and we think that everybody should be adapted by now. But if your employee says to you, I cannot perform my job duties at 100% level and facilitate my child's at home virtual learning, then you should trust that and not just think, because it's even though we've all had a year to practice, it's still hard.
Absolutely. I agree
Hard to
100%.
work and have, like, you know, a 7-year-old try to decipher online learning. So I'll just put that out there from personal experience. And yeah, like Kim said, you'll want to, EPSL is a higher tax credit. So for those first 3 sort of self-care reasons. So you'll want to use that first if someone qualifies. A couple people are asking if we're going to share the form. Yes, the one that's on our website now doesn't have the new vaccine reason on it. So I just need to update that and post
Yep.
that tomorrow.
And I think I've sent those to you, Leslie.
Oh, you did? Okay.
I think so. Yep.
All right, great. So yes, we will have those up. The one on there now doesn't include vaccine. It's still valid for the other reasons, just doesn't have the vaccine on there yet, but we'll get that updated. You could also you could use the one now and write in the vaccine reason probably, and it'd be fine. These are not official forms issued by the DOL. These are forms that Kim's team put together and that they are sharing with us. So the form doesn't go anywhere. It just goes to their file.
Correct.
All right. Okay, I think this is our last slide. Tax credits. So again, in green here, I just am reiterating that it doesn't matter how much they use before tomorrow. As of tomorrow, it resets. At least we know that for EPSL for certain. It might be for EFMLA. Stay tuned. So that first bullet there says if they're using emergency paid sick leave for the 1, 2, or 3 reasons, which I call self-care, it's 100% of an employee's regular pay with a limit of $511 per day. For short-term disability, they could probably take that concurrently with that. I would, particularly if that's going to be a pay cut for them. So I would check with your short-term disability provider just to have all that spelled out for you so you know how to deal with it when it happens. Second bullet, the credit available for EPSL when used for reasons 4 or 5, caring for another, is 2/3 of an employee's regular rate of pay with a limit of $200 per day. And then EFMLA is always 2/3. They did not change that. They expanded the qualifying reasons, but 2/3 is the rate for any of those qualifying reasons with a limit of $200 per day and a cap of $12,000 per employee, which would be a pay cut for some employees, in which case you would want to also, if you do offer short-term disability, that could run concurrently.
Mm-hmm.
You could choose to pay them the full rate. That's up to you. If you want to do that, you just will only get the tax credit for 2/3 of that, but you're still saving money. So you could consider that too. If you've got somebody who needs to be out to care for somebody else or a child, if you have the wherewithal, you could pay them regular wages, 100% of their wage, and then take a tax credit for 2/3 of it.
Right. And remember, just because the cap's $200 per day, if you do have like short-term disability, you could have them use all that and then just use, whatever amount, if it's less than 200, to make them whole. You don't have to pay the $200 max.
Right. That's true. That's true. Deanna says, if you paid in 2020 EPSL 80 hours to someone for having COVID, can they get COVID again? I mean, I
have heard that you can get it again after like 3 months. I've heard that.
I don't like that to say that out loud, but yeah, I mean,
I've heard that.
If they had it before and they have symptoms again and they've sought a medical diagnosis, or certainly if they have a positive test, then send them home. I mean, this virus is crazy. And
yeah.
Anything past it.
And we've heard about the new strains coming in. So I think that, here again, you're going to want to trust your employee if they're saying they're experiencing those symptoms again. And you certainly, wouldn't want them to come into the workplace.
Yeah. I mean, it just, if you're lucky enough to have be in an industry that can be performed from home, where most roles can be performed from home, that's a great option. And then you wouldn't, even have
Mhm.
to- if that person's well enough to work, then you don't have to worry about any of this stuff. It's just for people who are literally, they just, either the nature of their job requires them to be on site, or they feel badly enough, or they're focused on a child or a sick loved one to the point where they cannot perform their job duties from home.
Mhm. And I think it's important to really reiterate that, look, it's been a year. We're all kind of frustrated with it and sick of it. And a lot of employers now are at the point where they're beginning to require their employees to come back into the office. And I would just say that if you've got, if you have someone that either is afraid of coming into work because of their own conditions, or they're in a situation such as this, where they need emergency paid sick leave, but they could work from home, you should allow them to do so. We're going to get on the other side of this, but the pandemic, I think, has really allowed a lot of employers to adapt to this remote working function. And so if they're able to do so, I would encourage you to allow them to do so.
Yeah, I mean, the numbers are actually swinging back up in several states now, including Virginia. So it just, you guys know that I'm pretty cautionary when it comes to COVID. But I'm luckily, I can work from home. So I realize that that's not an option for a lot of people. But the point is that, I know it's a business disruption, but think about it this way: if that person really is sick and they're in the office or they're in the workplace, and in fact, if it would be even more of a disruption if there was an outbreak, and it's still out there. So the virus is still there. I mean, I'm the first one to admit that I'm complacent. I get complacent sometimes because I'm just so fatigued by it, and I get my second shot on Saturday, so it's just like I'm so close. But also, can you imagine coming this far and then getting sick? That would be awful. So be diligent, be communicative, acknowledge the fatigue, acknowledge that this is going on for so long now. But these are your options as an employer. And so I would definitely consider using them if you need to. Let's see. Anonymous asks, does our company determine the amount of leave we will allow an employee to use to receive a vaccine? For example, they can use 2 hours of their EPSL for vaccination and 8 hours after if they are experiencing symptoms afterwards. Or can they use as many up to 80 as they want? Just quick clarification, they're only entitled to 80 hours if they normally work 80 hours over a 2-week business period. So just a quick note there. It's not just 80 for everybody. It's whatever they would normally work over a 2-week period. And then Kim, I've not seen anything about
Amount of time.
Yeah, I haven't seen any
Yeah.
guidance on that.
Yeah, I think that you need to really exercise some caution there when you limit their time to get the vaccine. Because depending on where they go, they could be waiting for a long time. So I would, again, we're going to get the request form to you. They can just attest that they, weren't at work for a day because they were getting a vaccine, and just leave it, it could be the whole day. I would not put a limit like 4 hours or whatever.
Yeah, I mean, I think if that becomes a problem, if you think people are abusing it, maybe I'm not really sure what my suggestion would be, but
Yeah, again, I think if you have hard evidence that the person, lied, again, hard evidence, then you could potentially deny the leave, but I would exercise caution in doing so. And that's probably something you'd want to speak with your attorney.
Yeah. All right, our last question. Poor Megan's been waiting this whole time for this, but it's not what we're covering today, Megan. But she does ask, I would like to know how we'll report to Dominion Payroll and receive credit for the COBRA subsidy. Megan, if you don't mind actually putting that in an email to questions@dominionpayroll.com, and we'll answer that in that way. I don't know the correct answer. I don't want to tell you the wrong thing. So thank you for waiting. We appreciate that. COBRA is definitely COBRA is something that's changed in ARPA. So that's a great question. I think we're going to do a webinar, a special webinar next Tuesday on all things ARPA, and I will make a note that we should probably do a slide about COBRA. So thank you for that. Well, Kim, as usual, I've kept you longer than promised, but we all really appreciate
My pleasure. And I know that this is, this is a, first of all, very great questions that came up. And, we just want to make sure that you have all the information so that you can be compliant. And I'm happy to stay longer. That's fine.
Well, we appreciate your commitment. As everyone knows, we've been doing this for over a year now. We appreciate you guys tuning in, and wish we could see you in person at some point. I've actually never met Kim in person, so that's how
That's right.
These days. But in any case, we appreciate you guys. Stay safe out there. We're still in this, but we're in it together. And we're here for you. If you need us, send us your questions, tune in to our webinars, and have a great afternoon. Stay safe out there, and happy end of quarter.
All right. Thanks, Leslie.
Yep. See you soon.
Okay. Bye.
Bye.